Hello everyone, hope we are really doing very well. So I've received majorly two common statements that most of you tend to send us through email or DM. One of them is analysis when you're doing it and we are following along seems very easy, but when we try to get it or to get it done by ourselves, it becomes hard. That's one. Then secondly, people are saying that we do not know where would take the trade from. So it's what exactly I'm going to show you guys from. In simple terms, you guys want to identify areas of interest where you'd pick interest in taking the trade from, which is a very, very important aspect. If you're going to be a profitable and consistent trader, you need to be able to identify that. So we're going to make trading very, very simple for you. It's not easy, but it's going to be, this video, if you follow it up to the end, it should be able to make for you things very simple, right? So the first thing you have to do is you go to monthly time frame. Now, I've taught you guys how the importance of line chart and also the importance of candlestick chart, right? In the beginning videos that we posted on the channel. So make sure you guys understand the different uses of the charts. So zoom until you see that the market is giving you a clear movement of the price like this. For example, if you observe this, I'm starting from monthly. You guys know, if you've been following this channel, we start from monthly time frame. Now, why am I doing like this? I want to see the overall movement of the price, right? I want to see the overall, because right now you see the market is like trying to curve. But when people think that when the market is trying to curve, it's automatically going to buy, which is not most times the case. Why? Because the market doesn't move, even if it's going down, they move in a straight line. So what are we trying to do here? We're trying to identify the overall direction of the trend and its movement. So I'll go to line chart and identify. For example, if you observe, the market moved down and created a low here, which the market came and tested. So that one, I'm not interested in it. I'm looking for the one which the market did not test. So I'll come down again, mark this one here. What happened? The market gave us a retest, but gave us a false breakout. Now, a false breakout, when the market does a false breakout, comes back down, it has to retest here, which the market did by coming back there. So meaning I'm not interested in that. Now, I want you to observe this. The market is creating lower low, lower high, lower low, came back and tested. Now, again, the market gave us this low here. I'll mark it, right? But this time, I'll just delete this. But this time around, you can clearly observe the market has already come back here, meaning we are interested in the market coming back down here before we can continue, either down or even if we can break, but we need the market to come back here, meaning this is our overall long-term target for this price, right? The direction-wise. Also, we can identify that where is this market getting the base from? The market is getting the base from here. So I'll mark it also. Then I'll go back to the candlestick chart. Now, with this, it is very easy for me to identify where I'm coming from, where I'm going, direction. Most of you have heard me talking about direction. All the time I'm talking about direction. And you can clearly observe the market pushed up but came back to retest this area here. And then why it didn't reach exactly this line here is because of this candlestick. This is where most of you call it order block, but it's simply an area that sellers are present and they pushed price up, an area of demand, right? So again, we're moving from here to here. Are you getting it? So, but along the way, inside, we have what we call minor levels that the market will always respect. For example, we have this one, a W neckline. We know that when a W is created, the market breaks and comes back to test, which the market exactly did. So now we have to push higher. Are we together? Now, let's slightly go back into the daily. Let's go into the daily, sorry, not daily. From monthly, we go to weekly. Now, when you come to the weekly time frame, we have already marked this area. The market has tested it, right? I'll just adjust it so it's not big compared to the time frame I'm in. This area has been tested. Now, which you have to identify which area gave us the push to test this area here. The area that the area of the turning point that gave us the guts to come and test this area was this turning point, meaning that's our next target or the immediate target at one price to go and test. Are you getting it? So I'll also mark it, but I'm also going to change the color to like red to show that this is in weekly, right? Now remember, our long-term target is this one here, but we're not just going to get there through the market giving us through the market doing what? Giving us a straight move like this. It won't just move there like this, right? It has to go there step by step, which currently the market is doing. So personally, I would take like the market didn't properly test this area. But of course, we have seen the reason as to why. There's a strong demand area here that held the price tightly, then push it back up. Meaning we shall use it when the market hits this level and it's coming back down. Or even if the market reverses, we shall know that this is our target also. Right together? Now, we have identified our next target, which is this one here, but also we have an inside structure the market has created. If the market hits there until reverse, where is it reversing to? We have this area here, right? Remember, red is the weekly level. Now, when I go down to the daily time frame, you can clearly see I'll just adjust this same level here, just to not to make it so big, this same area here that we had marked in weekly. When the market is to look for retracements, this is the immediate level that it will be looking out for. So this is how you identify levels that you'd be trading from. For example, okay, I'll also adjust this slab here. It has now become big. I'll adjust it like that. For example, you cannot want to trade USDJPY where it is currently because you're trading in between. Always wait for the market to either reach resistance or wait for the market to come back to support. Just like how someone would have taken a trade from here to push upwards. You're getting it? Always make sure you do not put yourself in a situation whereby you're going to, people always asking that, to make a video about emotion, psychology and all that. All that will be coming, into play when you do not want to trade at major levels. For example, these are the major levels that you should be taking the trades at. Do not trade in between here. Most of you are trading in between here. And what causes that is you're doing analysis in smaller time frames where you should not be actually doing those the analysis, right? Most of you are analyzing in M15, M30. These are time frames that, M30. These are time frames that you can use, yes, but these are not the purposes of these time frames. These time frames are supposed to be used in doing what we call refining your entries, then you can trade, right? So identify these levels in bigger time frames so that it will make much more sense to you. You will be risking very little money and having to maximize the returns. Are you getting it? So those who are saying that we find it difficult, it's easy for you when you're analyzing, and for us it's hard. I hope you guys can follow this. What did we start with? We started by first marking out the overall movement where we expect price is going to go. And we marked this and this. That's direction. We expected price to come down and touch here. Why didn't it come down? Because we had a massive area of order block, or what we call demand area, which pushed price up. Then after that, we went further to identify some minor levels. Remember, I've told you the market I moved straight. We identified this turning point. Of course, it was big like this, but we reduced it when we went to daily, and also identified an inside structure. So then we further went to daily to identify also what's the possibility that where the market could retrace to, because we have major, bigger term levels where the market could turn from, but also there are those inside ones. For example, in monthly, we have this one and this one, but also inside here, the market is moving while creating turning points. So these are the turning points that we use into our advantage. Are you getting it? So I hope this really has helped you answer those two questions of where do I trade from? In simple terms, that's area of interest, picking interest in a trade. First, identify direction, and you get structural areas, which is point of interest or areas of interest in your structure timeframes. That's weekly and daily, just like I've showed you here. Then identify possible retracement levels or those inner structures out of the major levels, right? So I hope this makes sense. Just check how many objects I have on my chart. Let's just count them. There's this one, that is 1, this is 2, this is 3, this is 4, this is 5. And these 5 objects that I've drawn here, from in between here, I can use them for the next 3 years, right? Of course, I will be adding on others. The more we keep maybe breaking and moving, we shall be adding. But the chart will still be clean and decision-making will be very easy. You can add on some aspects of confluence like Fibonacci. You can add on a moving average, but make sure you're not having a lot of things to confuse you. Make sure that your chart is very simple to be understood by yourself, right? Because trading is personal, trading is for yourself. So make sure it is very easy to be understood and everything will be okay. I really hope this will simplify those questions, those who have been asking, because it has really been massive. I hope I've really tried to answer this. I wish you guys a profitable week.